You know that feeling when you buy something and the price drops right after? Like you finally get a new phone, you feel proud, and then the next day it's $200 cheaper. It feels personal, like the universe saw you smile and said, "Not today." Now imagine that feeling, but it's your whole investment. You bought Bitcoin near the top. You bought around $100,000 in late 2024. You didn't buy as a joke. You didn't buy because your cousin sent you a "this is going to the moon" message at 2 a.m. You did homework. You watched the news. You saw the big names show up. The ETF talk was everywhere. BlackRock wasn't. Other firms were in. MicroStrategy was buying like they had a money machine in the basement. You told yourself, this is it. This is the start of the next big run. And now you're watching Bitcoin bounce between $85,000 and $98,000. It moves up, it drops. It moves up again. It drops again. It feels like the price is stuck. It feels like something is holding it down. So you ask the same question every smart person asks. If the ETFs are here and the big money is here, why isn't Bitcoin already at $150,000? Why isn't it at $200,000? What am I not seeing? Look, I'm not going to act like I have secret bank files on my desk, but I spend way too much time thinking about why prices move the way they do. And if you bought Bitcoin in the last few months and you feel confused, hit like and subscribe. I am going to break this down in plain words, and I am going to show you the part most people miss. Here's the truth. I did not want to make this video. For a long time, when people said banks are controlling Bitcoin, it sounded like pure internet talk. It sounded like late-night posts with no proof. It sounded like people trying to feel better about a chart they didn't like. But then I started looking at how big money can push prices around without doing anything illegal. I'm not talking about secret deals. I'm talking about legal tools. I'm talking about money pressure. I'm talking about moves that have been used for a long time. And when I saw the full picture, it honestly surprised me, because this kind of pressure has a history. It has been used on companies. It has been used on whole countries. It can be used on anything that is debt and deadlines. So I want to tell you a story that seems far away, but it connects. In 1982, Mexico borrowed a lot of money from big banks. They used it to build projects and grow the country. It sounded smart, but there was a trap. The debt was in US dollars, not pesos. That matters because Mexico can't print US dollars. Mexico can only earn dollars by selling goods or by borrowing more. Then the US raised interest rates. The dollar got stronger. Mexico's debt got harder to pay. The payments grew fast. Mexico got stuck. They owed a huge amount, and they could not control the money they needed to pay it. Then the IMF came in with what they called help. But the help came with demands. Mexico had to sell off parts of its economy. Mexico had to cut spending. Mexico had to open markets. Mexico had to make big changes to satisfy the lenders. Many people call this a debt trap. Some people call it a debt spiral. Either way, the result is the same. Once you are stuck in debt you can't control, you lose choices. You get forced to sell. Now here is why this matters for Bitcoin. The same kind of trap can hit a company. If a company has debt and fixed payments, it can get pushed into bad moves. It can get forced to sell its best asset at the worst time. And there is one company that holds a huge amount of Bitcoin, and it has a setup that can turn dangerous under pressure. In the next bundle, we're going to talk about that company and why it may be a key reason Bitcoin can feel stuck, even when the headlines say adoption is real. Here's the payoff. The company is MicroStrategy. On paper, it is a software company. In real life, it has become a Bitcoin holding machine. It raises money and buys Bitcoin over and over. This looks smart when Bitcoin goes up. It looks scary when Bitcoin goes sideways or drops. MicroStrategy has a huge Bitcoin stack. It is one of the biggest holders in the world. That is why it matters. But the bigger issue is not the Bitcoin. The bigger issue is how they paid for it. They raised money in different ways. They sold stock. They issued bonds that can turn into stock. They issued preferred shares that must be paid. Those tools come with rules. Those rules come with bills. Bonds have interest payments. Preferred shares have payouts that are not optional. If you can't pay, you look weak. If you look weak, markets punish you. If markets punish you, it gets even harder to raise money. This is where the trap can form. MicroStrategy's main business does not bring in enough cash to cover all of those payments forever. So they rely on their ability to raise more money, and that ability depends a lot on their stock price. MicroStrategy often trades above the value of its Bitcoin minus its debt. That extra value is called a premium. The premium is important because it makes it easier to raise cash by selling stock. As long as the premium is there, the plan works. They sell stock. They get cash. They buy more Bitcoin. The story stays strong. The stock stays strong. The cycle keeps going. But what if the premium goes away? What if the market stops paying extra for the company? If the stock trades at a discount, MicroStrategy has a big problem. Selling stock at that point feels like selling cheap. It hurts current holders. It also makes raising cash harder. Now think about their payments. They still have bills due each year. If they can't raise cash and their cash pile runs low, what do? They sell Bitcoin. And if they sell Bitcoin, Bitcoin can drop. And if Bitcoin drops, MicroStrategy stock can drop harder. And if the stock drops harder, the premium is gone for longer. Then the next step is worse. They may need to sell more Bitcoin. That is the spiral. It feeds itself. Now you might ask, why would anyone want that? One theory is simple. Some people believe big players may want to buy Bitcoin cheaper. They may like Bitcoin long term. They just want a better entry price. A big forced seller creates that chance. If a company has to sell billions in Bitcoin, it will not dump it all on an app like a retail person. It will likely do large private deals. Those deals often come with a discount. So if you are a big bank and you can buy a huge amount of Bitcoin in one shot at a lower price, that is a win. You can hold it. You can sell it to clients later. You can take the spread. Either way, you got supply on sale. Do I know this is happening? No. I can't prove a secret plan. But I can tell you this kind of play has happened before in other markets. It has happened with stocks. It has happened with debt deals. It has happened when firms smell weakness and press it. And the next bundle is where it gets real. Because we need to talk about short selling, how legal pressure works, and why nobody broke the law does not mean nobody played a game. Let's talk about short selling, because this is where many people get lost. Short selling is when you bet a stock will fall. You borrow shares, sell them, and try to buy them back later at a lower price. That is the simple idea. But short selling is not just a bet. It can also create pressure. It can shape the story around a stock. It can scare holders. It can pull the price down. Now I want to be careful here. I am not saying there is a secret group working together. I am not saying I have proof of a big plan. I am saying the setup is weak in one spot, and markets like to attack weak spots. There were times when MicroStrategy traded below the value of its Bitcoin stack. That means the market was saying, we see risk here. The market was not giving full credit for the Bitcoin because it feared the debt and the payments. And around those times, short interest was high. Some well-known short sellers talked about their bets. Big banks also published reports warning that the setup was risky and that if the stock dropped far enough, it could face more forced selling from funds that track indexes. Is that illegal? No. Publishing research is allowed. Shorting is allowed. Talking about risk is allowed. But the effect can still be the same. If you keep pushing the stock down, you raise stress. If you raise stress, you raise the chance MicroStrategy must take action. If it must take action, it may have to sell Bitcoin. That is why people say modern markets can be war without crimes. Pressure can be legal. The tools are legal. The impact can still be huge. Pause and comment moment number 1. If the ETFs are real and big money is here, why does Bitcoin still act like it hits a ceiling every time it tries to run? Pause and comment. You think it is just normal market fear? Or do you think something is holding it down? Now, here is the part that matters for you. Even if MicroStrategy is under pressure, Bitcoin is still Bitcoin. Bitcoin is not MicroStrategy, but MicroStrategy is big enough that what happens to it can affect the market mood and the market flow. If MicroStrategy ever became a forced seller, that would add supply at the wrong time. That supply could push price down. That price drop would scare retail. That fear would cause more selling. That selling would help big buyers get what they want. This is how wealth moves without a person stealing from you. It is not a hack. It is not a robbery. It is a stress test. It is patience versus panic. And if you want to win, you have to understand the real fight. The real fight is not your chart app. The real fight is your mind. In the next bundle, I'm going to show you how pros think about setups like this, what signals matter, and why pressure can be a gift if you know what you're looking at. So what do you do with this? First, you stop mixing MicroStrategy with Bitcoin. They are linked, but they are not the same thing. Bitcoin is an asset. MicroStrategy is a company with debt and payments. If MicroStrategy struggles, it does not mean Bitcoin failed. It means leverage is risky. Second, you stop letting price alone control your mood. Retail investors often look at price and feel fear. Pros look at price and ask why. They ask what is driving the move. They ask if the long-term story changed or if the move is driven by short-term pressure. If the long-term story did not change, pros often buy into fear. Retail often sells into fear. That is the whole game. Now let's talk time, because time is key here. MicroStrategy has a cash runway. It has money set aside to make payments. If that runway is real, then the death spiral is not an instant event. It is a risk over time. That means the market will watch the clock. The market will watch updates. The market will watch the next reports. If Bitcoin rises again, MicroStrategy looks strong. If the stock premium returns, MicroStrategy can raise cash again. If MicroStrategy can raise cash, it can avoid selling Bitcoin. That breaks the spiral idea. So instead of guessing, you watch the simple signals. You watch their cash. You watch their payments. You watch if they ever sell Bitcoin. You watch if they refinance debt. Those things matter more than daily headlines. Now let me give you a mindset shift. If some players want cheap Bitcoin, they will not chase it at highs. They will wait for fear. They will wait for forced sellers. They will wait for the moment retail gives up. That is why pressure can be a chance for long-term holders. It can be a chance to add at better prices. Not because you love pain, but because you understand why it is happening. Pause and comment moment number 2. Be honest. Do you think big players want Bitcoin to fail? Or do you think they want it cheap? Comment which one you believe, because those are two very different worlds. There is one more reason Bitcoin is perfect for this kind of game. Bitcoin is already volatile. It moves fast. It swings hard. That makes it easy to hide pressure inside normal moves. If a stock drops 30% for no reason, people ask questions. If Bitcoin drops 20% in a week, people shrug and say, that's just Bitcoin. That's what makes it a good target for pressure games. But here's the good news. Pressure does not last forever. It comes in waves. It hits weak hands, it clears the room, then price can move again. The final question is what side you are on. Are you the one who panics and sells when fear is loud? Or are you the one who stays calm and watches the real signals? In the next bundle, I'm going to tie this all together, bring in a clean example from another market, and end with the most controversial question in this whole Bitcoin debate. Let me give you a parallel from gold, because it shows the pattern in a way people can feel. In the late 1990s, some central banks sold a lot of gold. The most famous case is the Bank of England selling a big part of its gold near a low price. Later, gold went way higher. People still argue about why those sales happened. The official reason was that gold was old and did not earn yield. Some people believe there were other reasons. Some people believe big groups wanted gold cheap. Can we prove that? No. But the pattern is clear. Big sellers create pressure. Price drops. Strong buyers step in. Later, price rises. The sellers look foolish. The buyers look smart. Now look at Bitcoin. Bitcoin is now tied to the old system in new ways. ETFs create a bridge. Big firms manage the bridge. Big firms can shape flows. Big firms can change the mood with reports and headlines. That does not mean Bitcoin is fake. It means the market around Bitcoin is growing up. And growing up in finance often means more games, not fewer. And here's the part that should make you think. If Bitcoin was truly worthless, big money would ignore it. They would not care. They would not build products around it. They would not spend time trying to buy it in size. They would not fight over supply. You fight over things that matter. So when you see pressure, do not only see danger, also see interest. Now, this does not mean you should be blind. You should manage risk. You should not bet money you need next month. You should not let your life depend on one chart. But it does mean you should stop letting fear push you into bad moves. Because most people do not lose in markets because the thesis was wrong. They lose because they quit at the worst time. They quit because the pain was too loud. Pause and comment moment #3. You think the biggest money in the world is trying to protect you? Or do you think they are trying to shake you out? Comment your answer, because this is where the truth usually sits. Now we reach the end. We have two ideas at once. 1. Bitcoin can be real long-term. 2. Markets can still push it around short-term through pressure points. Bitcoin is a prize. MicroStrategy is a big pressure point. ETFs are a big bridge. Big players know how to use bridges and pressure points. So now we end with the one question that decides everything. In the final bundle, I'll ask it straight, and I want you to answer it in the comments, because your answer tells me if you're thinking like retail or thinking like the people who actually win. So here's the big question. Is Bitcoin's price action right now just normal market noise? Or is it a planned pressure game to get supply from weak hands? I'm not saying it is proven. I'm saying the setup makes it possible. The tools exist. The history exists. The incentives exist. And the reason this matters is simple. If you think it is just noise, you will react like it is just noise. You will buy high when you feel safe. You will sell low when you feel scared. You will repeat the same cycle. If you think it is a pressure game, you will act different. You will watch the real signals. You will look at debt and cash and deadlines. You will see fear as part of the process, not as a sign you were wrong. Bitcoin is not a calm asset. Bitcoin is a test. It tests patience. It tests belief. It tests risk control. It tests your need for comfort. And the market is full of players who are better at this than you. They are not better because they are smarter. They are better because they are less emotional. That is why education matters. When you know what you own and why you own it, you stop getting pushed around by every headline. You stop getting played by every dip. You stop letting strangers on the internet control your mood. Now let's bring it back to you. If you bought near $100,000 and you feel sick watching the chart, that is normal. But your job is not to predict every move. Your job is to avoid doing the one thing that turns a paper loss into a real loss. Panic selling. Because the people with big money love panic. Panic is supply. So here's my controversial question, and I want you to answer it. Do you think MicroStrategy is a hidden risk that could force Bitcoin lower? Or do you think the fear around MicroStrategy is being used to scare retail out so big players can buy more? Drop your answer in the comments, and tell me what price level would actually make you sell, because I promise you, your answer says more about your mindset than it does about Bitcoin. If this helped you, hit subscribe, because the next video is going to go deeper into the ETF side of this story and why institutional adoption can be both bullish and dangerous at the same time. And once you see how that works, you won't look at Bitcoin headlines the same way again.